Hi guys, hope everyone has had a good week. I wanted to just get the weekend analysis out to you before the weekend really starts. I know a lot of us just kind of like to chill out and I suppose do our research and homework on a Sunday evening. So I'll get this out to you early and obviously you can do with it as you wish. What I'm going to do is just start off as I will do every week from now on if you've missed maybe the last couple of weekend analysis, is just start off with the trade updates. So first up, ENPH, we had an alert go out there during the week. Obviously, I understand Monday and Tuesday was a little bit sticky for the market. I think what I'm seeing here with ENPH, it looks like a bit of a textbook breakout. Now, I've had a lot of questions on why the stop loss is placed where it is. I think the thing to remember, guys, is that I am looking for risk to reward propositions and I'm looking for optimal entries into the market. I don't want to be adversely affected by the tree shaking in the market. Obviously, we had a breakout, I sent an alert out. We had, I think, a 4% tree shake, and lo and behold, we're pretty much back to where we were the following day. So, ENPH, nothing has changed. I'm still bullish on the stock, and we've got the breakout, the optimal entry, it's there. So yeah, please do with that one as you wish. If you don't like the chart, if you don't like the company, don't take the trade, guys. That's obviously my chart, that's what I see. I can't really add much more than that, unfortunately. So ENPH, I think the entry is there. Starbucks is up and running, I think. Hopefully it's not another false dawn. It's obviously chopped about a little bit for the last few weeks, but it does look like we've had a positive close there on Friday. So the expectation is that, if the market continues next week, Starbucks, you would expect, given the strength that it's shown today, that it will show a bit of continuation. Now, I've had a lot of messages with quite a few of you on Nike today, and the reason for that is we can clearly see we're at our first point here now. Maybe those of you that are new to the group, I sent a trade alert out to the guys, I think it was 92 optimal entry. Lo and behold, we've obviously chopped about, we've used the ATR trailing stop, but now we're at an evaluation point where we want to maybe just say, do you know what, if we get resistance here, if we get a rejection at this level, profit taking becomes valid. Likewise, if we get a breakout above this level, I wouldn't necessarily look to compound here, because we are approaching the $100 barrier, which we know with a lot of stocks, with the psychological effect that it has here, we can absolutely see a lot of profit taking and we can see a bit of a stalling of price. So hopefully it makes it to $100, but I think it's logical that profit taking and tightening up stop losses is absolutely valid with Nike at the moment. So it's taken, I think, 3.5 weeks for it to reach that. I think it was 8 to 10% was initially what we were hoping for there. That's good for a month. That's not too bad at all. So those of you that are in Nike, start to get a game plan together. TGX, I am still bullish on the stock at the moment. I've gone back and forth with one or two of you this week. I've been stopped out of my position on this red candle here. I'm okay with that. Thanks very much, Mr. TGX. I can always revisit. I know some of you bought this breakout, and that's valid as well. Stop loss, I think this trend line has a lot of merit here, so I think if you get a complete breakdown here and a close below this level, I think that's where you may want to just say, do you know what, let's not take any chances holding this one. So yeah, that's my kind of thoughts on TJX at the moment. Okta, obviously we had earnings this week, and it's not been a favourable reaction. Obviously trade alert went out. I think for me now, Okta is just off the menu. That just makes a lot of sense. I know a lot of you guys like the fundamentals on this one. I know that you like to buy the dips and so forth. Obviously, that's not my game. I leave it up to you guys that get into that. But I think from a technical level, I think I would be concerned about a breakdown below this level. So yeah, I think Octa, I think we just, for me anyway, I think it's just a case of just saying, thanks very much, on to the next one. Caterpillar is still bullish on the stock. It has obviously flirted this week with the ATR trailing stop. We've had a pullback. Momentum's dipped a little bit, but I think that is probably representing opportunity for Caterpillar. I don't see much changing. I'm still bullish on the stock for those of you that are still in there. And hopefully we start to move back towards 160. I do accept, however, that it's being a bit of a pain in the ass. It is kind of chopping about sideways. It's frustrating. I get it, but all good trends, they do sometimes take their time, and given the run that it's had since the beginning of October, it stands to reason that it just takes a little breather, and that's all I'm seeing with Caterpillar at the moment. Finally, breakout in financials, guys. So what I'd like you to do this weekend is maybe do a bit of due diligence on the next 3 stocks that I'm going to walk through. I think the Goldman Sachs trade alert, if we get continuation on Monday, I think Goldman Sachs will be good to go. For those of you that are new, I sent a trade alert out a few weeks ago and cancelled the trade alert because we got a rejection in that very chart XLF. So I think this one could be good to go if we get continuation on Monday. As we can see, 23% upside. The thesis is still exactly the same here. Nothing has changed. The only thing that's changed is that we've now looking like we've got that breakout in Goldman Sachs. Definitely worth keeping an eye on. If Goldman Sachs is a bit too rich for some of you, I think Bank of America is a good alternative. Obviously 33.50. I've had an alert go off today for this. So I think Bank of America is one that you may also wish to consider. JP Morgan as well. It's obviously a leader in the space. So again, if financials are breaking out, you would expect JP Morgan to run with it. Goldman Sachs, Bank of America. I think those are 3 logical areas that you might want to consider. Now, when we had, sorry, I should just apologise for the sniffling. I've got a little bit of a cold, man flu at the moment, so apologies if anything's coming across on the audio. So on Monday, I had this chart prepped for Sony Corp. We obviously had a bit of a decline Monday, Tuesday, so I actually held off sending this out. However, it has been talked about a couple of times in the recent weekend analysis. We're breaking out of a 17-year base, guys. That's not bearish. So I think Sony, I think for those of you, I know that 1 or 2 of you have actually jumped in on this already and are doing very well. But yeah, I think we absolutely have to be bullish on Sony at this point. Likewise, Apple keeps on motoring. Again, the trend is there. There's still room for this to run with RSI and so forth. So if you're in there, you're still in Apple, compounding is looking like it's the on the menu, I suppose, this weekend. Something for you to obviously consider. Now, Bristol Myers is one that's come onto the radar this week. We've obviously had a breakout of a descending trend line. It's moving. However, what I like about this one is that the compound levels are clearly laid out for us. So I think it's very, very sensible. I think this is a valid area to look to take an entry. I think we just say we're bullish above, let's say 59.50, and I think you just manage the trade and you look to compound above each level if the trade goes in your favour naturally. But yeah, I think the trend is certainly there recently. We can see that there's upside potential, so I think there's a bit of due diligence warranted there. CRISPR Therapeutics, again, I think we're looking for a breakout above 74. So set your alerts there for $74. DR Horton, again, this is one that's been talked about a couple of times. I've gone privately with one or two of you as well. Again, I think we just say we're bullish above this breakout level. Not the fastest moving of stocks, I would completely accept that. But again, you've heard me say it a million times, slow and steady also wins the race. INCY, we've obviously had a breakout recently, but are we now seeing a bullish flag? That would be the question. If it is a bullish flag, you would expect this to really start to motor. Now, just to clarify something with the $100 round number concept. Now, I suppose that this is just my theory, just from the thousands of charts that I have observed over the years. The $100 round number barrier is more significant when price has never reached that level in the past. Now, with something like INCY, we can clearly see that it's been as high as 140. Now, $100 at that point, if price is going to retrace its steps, I am mindful of $100, but I'm less mindful than what I would be if price had never been there. So the way that I would view the $100 round number concept in this particular scenario is it's more of a speed bump rather than a wall. So that wouldn't necessarily stop me from taking a position on this bull flag, because if it is a bullish flag, you would expect it to just kind of rip through $100, no problems. So that's why I wanted to highlight INCY this weekend. I think again it warrants a bit of due diligence info. I know that one or two of you have been in this a while, compounding, doing very well. Again, it's not stopping. Again, it's not the fastest moving stock. Again, I accept that. But again, the trend is there for all to see. And the good thing about a chart like this is there's a very logical, well-placed stop loss to be had. You just place it somewhere below this level. Makes a lot of sense. Kellogg has broken out above $66, 14% upside there. So again, it's been chopping about sideways for the last 4 or 5 months. It's not a bad thing that we've got a breakout here, guys. So again, I think Kellogg. I think Robert. I think you might be in this one at the moment, or you might have held a position in this for quite some time. But yeah, makes a lot of sense. Lamb Weston broken out above $84 has turned up on my scans this week. So again, bit of due diligence there. Medical Properties Trust, again, broken out above $20. Not the most expensive of stocks either. Plenty of room for this one to run with RSI, and it is technically a breakout on above average recent volume. Merck & Co, 15% upside. Highlighted this one last weekend. One or two of you have jumped in, I know that much. Again, slow and steady. PPG has shown up on the scans this week. We've had a breakout. It's advanced, pulled back, and it does look like it wants to start moving again. So I think PPG, one that you might want to kind of look at. Ross, I know that this is one that you like. I don't know if you bought the dip on this. I know you were wanting to buy the dip. If you have, congrats. But again, I think straightforward here, guys. I'm not reinventing any wheels here. Support and resistance, we're bullish above this level. Below it, not so much. And I think, yeah, so last three. Cisco Corp, again, we've got a breakout. I think we just say we're a bullish above 81.75. Well-placed stop loss, I think under here makes a lot of sense. Taiwan Semiconductors, the thing just keeps on moving. If you look at the daily chart on this one, it's bordering ridiculous. It's really starting to move again. Again, plenty of room for it to run with RSI, so that's one of the reasons why I wanted to highlight this one. And Russell, I suppose the chart that you sent out, sorry guys, this isn't my chart, this is a chart that one of my annual subscribers, Russell, sent over to me. Absolutely valid and very, very inexpensive stock, good upside potential. So I think CMRE warrants a little bit of due diligence as well. So guys, there's a few charts there this week, because obviously the market's broken out. Now, when we get a market breaking out, all the sectors, there's so much opportunity, that there's so many trades that you can justify. So you just want to just focus on the best stocks. And I think there's a good 20 charts there for you to do a bit of due diligence on for next week. So as always, please reach out to me at some point over the weekend. I will be probably opening the laptop sometime on Sunday evening. I think I'll probably do a bit of due diligence there, and I'll get back to any messages, requests and so forth. But enjoy your weekend guys, and I'll speak to you all soon. Thanks.